Salesforce trying to sell their stock for a cheaper price, looking at a 4-for-1 stock split, so it'll be more affordable for the little folks. So Jim, how does an investor trade around something like that? Because that's not, usually you see a 2-for-1, this is a 4-for-1.
I think Mark Benioff, the CEO, is doing something that's very smart here. I think he's tired of having his stock be footballed by hedge funds, which is what happens when you have a very high price stock and it's going to be run up and down by companies that have by hedge funds that have enough money to be able to buy a lot of shares, or by people who play in options. Now, I know that it creates no value. A split creates no value whatsoever. But I think that we're in a battle of holders. Like, can you get the right holders versus the wrong holders? Now, I know this from Mad Money. People like to come on the show Mad Money because I have the right holders who watch this show. I've got individuals who are looking
Real
for a good
people.
stock, right? Looking for a good stock, don't want to flip it, really want to own something that is very good and go for the ride as long as it's, the fundamentals hold up. But these stocks are too expensive. Now, there had been another school of thought which just said Warren Buffett is right, which is that just let the stock run to the sky. And Apple, so that ilk, MasterCard, which is an ActionAlertsPlus.com name as well as Apple, and Salesforce, not an Action Alerts name, but you are alienating a substantial number of people who would like to own the stock. Amazon's doing that, Netflix. These are all companies that have decided that the Buffett way is right. I know that to talk about a split is it's fatuous. It's a fatuous thing to split the stock. But if you're trying to get better holders, it's going to work. And I think that's why you see the stock higher.
All right, so better holders, except for the insiders. We've had 16 insider sells in the last few months.
It's been consistent insider selling the whole way.
That makes people a little nervous.
It's been consistent insider selling the whole way. I think the company's fundamentals are good. I always leave this one to people to decide whether the fundamentals are good, but you're paying too much for it. It is very expensive stock.
Book value's $14.65. PE 85. I mean, that seems
look,
rich.
Netflix is very highly valued. So is Amazon, and there are a couple stocks that have broken out of the orb of valuation, and it's always been a sucker play over the long term to be in those, but over the short term, it's produced tremendous returns. And I always say to use deep in the money calls for these because I'm afraid they'll go down so big on a swoon, Chipotle from 400 to 300. But I think it's important to point out that the stock's reacting positively because people want to own the stock, but it has been too expensive per share.
All right, so now they do the 4-for-1 stock split. People that can get into it, that couldn't get into it earlier, and that's a boon and positive for the stock.
Exactly right.
All right, there you go. Here comes your chance, folks. If you want Salesforce.com, it's going to be a little bit cheaper pretty soon for you.